Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. The market is starting to get volatile, and with things like consumer spending coming into question, inflation is a worry, the housing market is a concern. There's a lot of concerns in the market, even though stocks have been rising in 2023. So what are some defensive stocks that investors can buy today to still get exposure to the market, but maybe not have the same downside as other stocks? Well, I have three for you today. That's what I'm going to cover. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And if you like this video, check out my newsletter, Asymmetric Investing. I have a link to that in the show notes. The first company to cover is Verizon. And Verizon is really out of favor right now. But that's why I think it's actually a great defensive stock. You can see here that $135 billion in revenue over the last 12 months, over $20 billion in net income. If we look over here at the snapshot, you can see that shares are trading for just 7 times earnings, and the dividend yield is 7.5%. Now, the question in a downturn is, are people going to cancel their cell phone plans? And I think the answer is probably not. And if they don't, Verizon will continue to churn out cash. Now, I would like to see them lower their debt level of $182 billion right now. That is the biggest risk for the company. But I think operationally, they have the kind of product and the kind of moat that is going to be great in a downturn. And given how beaten up the stock is, I don't know how much farther it can fall. So if the market does go south, Verizon is going to be a great place to be. The second company is Alphabet, the parent company of Google. And this is, again, the kind of company that I just think is so ingrained in what we do every day that it's not going to probably go anywhere. Even in the market downturn, we may see a pullback in something like advertising, search advertising, but companies are still going to be spending money trying to attract customers. This is an expensive stock compared to Verizon at a 29 price to earnings multiple, 22 on a next 12-month basis. But the company has great margins, multiple products with over 1 billion customers, so a ton of geographic diversity. And I think a leading position, not only in search, but also in things like streaming video with YouTube, and also even in artificial intelligence. We're finding that more and more, that this is a company that's not necessarily behind in AI of a leader than you would think. So in a market downturn, as a lot of tech stocks go south, I think this is one that's going to hold up relatively well. And the final one, again in the tech space, is Apple. If you remember, during the downturn in the great financial crisis, Apple actually did very well, continued to grow throughout that time. And it has so much cash flow, that I think this is the kind of business that is going to do extremely well. When investors are looking for safety, this is going to be the kind of company that provides that safety. Now, again, this is not a cheap stock today. Price to earnings multiple of around 30, but they have a new iPhone coming out likely in the next month or two, and they continue to be a leader in making chips for smartphones. I don't think the smartphone business is going to go anywhere. I think that's just going to be more and more ingrained in our lives over the next 10 or 20 years. So Apple has a phenomenal business. And again, when people are looking for safety, this is going to be the kind of stock that they're going to move to. If the market does get volatile and it even goes south later in 2023 or in 2024 because of something like rising interest rates, higher inflation, a declining economy, investors are going to be looking for defensive places in the market. And I think Verizon, Alphabet, and Apple are going to be great places to be. All stocks that I own. And then one of the big reasons is they're just stalwarts in the market, leaders in their industry. And that's the kind of stocks that I want to hold long term. But what do you think about those three? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.